growth. Let's get to this session today, Julia, and another good one. Good gains on the 200.
It was one of those sessions which was a little bit of a relief. You could go to lunch for 10 minutes and not worry that the market had fallen apart by the time you came back. The US was up overnight, China was up today, our market up by 1.1%. Green across the screen, every single sector trading higher. There was a tilt though towards those defensive areas, so I guess some of those nerves in the market still are there. It was areas like the utility space and the healthcare space which were the best performing today, and these are areas that perform to do well, whether the global economy is going well or whether it's not, because we all use electricity and we all need healthcare as well. So utilities was the best, followed by healthcare. In the healthcare space, some clear outstanding performances on the back of earnings reports. Ramsay Health Care up more than 5%. We also saw Healthscope up more than 6% on the back of that. And Blackmores, I think, a standout. Once again, a new record high. The stock up around about 9% on the market. So altogether, a very strong session. I think the key for investors is this volatility over? We've seen this massive volatility spike in the month of August, as we have in many other years. And for me, it does bring back echoes of 2011, where from the peak to the trough we saw a correction of about 24%. And actually we haven't seen volatility this high in Australia since 2011. So just having a look at the volatility chart for the Australian market, this is the 1 year chart. And you can see in August we have seen quite a massive spike, but just looking at it on a 5-year basis, this is a volatility chart in Australia, and you can see that you have to go back to 2011 before volatility spiked that high. And back in 2011, when volatility spiked in August, we saw it dying down and the market rally only to spike higher back in October, when October 4th was where the low was felt for that particular correction. So I think a big question for investors is that volatility over, or is it going to hang around for another 6 to 8 weeks?
Indeed. And Mike?
I guess when you have a look at economic cycles, and most things move in cycles, including China's economy. It's been now 8 years since Chinese growth peaked at 14% back in 2007. So we are looking for a bottom. The question is whether it's this year, next year, or the year after. The fact that we are seeing the currency of China moving, I think that's a positive for China at a time when exports manufacturing are low. The fact that we are seeing devaluation of the Chinese renminbi means that allows them to kickstart growth. So that's an interesting development, one that's good for China, unfortunately not one that's good for emerging markets, which are facing the prospect of a double whammy. On one hand, the large amount of debt that they're using to grow, it looks like the cost is going up there because US interest rates, which have been fueling a lot of global growth, is set to go up. And then on the other hand, most of these countries are exporting nations and China's devaluing its currency. So it's a lot more harder for these countries to grow when you've got Chinese exports becoming a lot more competitive. So emerging markets is where a lot of the pain has been felt, and it's going to be interesting to see whether we now do see that Chinese cycle turning. It has been 8 years, so quite a bit of time. The question is it this year, next year, or the year after, or is there more pain to come, pain that hasn't really been signalled to the market, and what the market is trying to price in at the moment, I think, is the unknown. They're not quite believing that 7% growth rate, and they're not quite sure where that growth rate may be for China at the moment.
Mike, the outlook for Ramsay?
I think it's looking good. Underlying profit up by 18%. A lot of it is on the back of acquisitions. On the flip side, the risks are clearly regulation, because the government's probably going to spend less in the healthcare space given the ageing demographics, and it really can't afford to spend as much as it has per head as we see the baby boomers moving into retirement. And one of the things I don't think we talk about a lot with Ramsay is that it's a massive landowner as well. It owns a lot of land and assets of the hospitals that it owns. So that's one of the things that holds up valuations. But it is a good quality company, and today we certainly saw a lot of buying. We have seen a significant pullback, and it's one of those companies that people really do want to hold in their portfolios. So seeing this pullback provides an attractive opportunity.